Hello, excuse me. Hello and welcome. This is Brandon Wendell, Chartered Market Technician, doing some live analysis on the energy markets for today. So I'm going to go ahead and take a look to see what might happen for the next coming week. This is recorded on Sunday, the 7th. Yeah, November 7th. So here we are looking at the gold, or sorry, not gold, looking at crude oil. I said energies this time. Anyway, looking at crude oil, we do have a little bit of momentum problem with this trend. We've been moving up very, very sharply. However, when you take a look at the RSI, we are getting a lot of weakness coming in. You can see from either point, either high, even though we're making new highs in price, we're barely making any kind of new highs on the momentum indicator. So that's the divergence that we've got going on right now and could lead to a correction, a pullback in price. Not necessarily reversal. You can actually compare it to the previous one we saw right here. Pretty much the same thing, right? Negative divergence led to pullback. So we should get a pullback. We're already starting to see some of it right now. As we go down to the daily time frame, we can see we've already done a little bit of that pullback. And considering, we still had the lack of momentum here. Overall, we're still bullish though. And if we look at the daily chart, let's see, do we have anything as far as demand? It does look like this one. Go a little bit higher right there. So we bounced off that demand zone already. We may not continue to go any lower. This may be all we get. As a matter of fact, let me go back to that weekly for a moment. And I can put in a Fibonacci retracement here to get an idea of where we should be pulling back to. So as I go in with my retracement values, I want to see if they line up with any kind of the zones that I was finding. Because if they do, then that makes it a higher probability because you got what's called confluence. And it's the area of 23.6. It wasn't exact, but we'll see. But this is hitting that daily demand zone, possibly ready to bounce. We did stay above 40 on the RSI. If we drop down to a 4-hour chart, we can see that we've hit a tested zone here multiple times, and it seems to be working again. You can see this was kind of a rally-based rally. We bounced there multiple times, and it worked. We went very deep into the zone, but had a positive divergence that launched us upward. Now, for us to change from a bearish to a bullish trend on this 4-hour time frame, we need to actually do a couple things. One, we can get a pullback that doesn't go below 40 on the RSI, or number two, we break out above the prior high and above 60 on the RSI. Either one of those two signs would signal that we're going to continue the run to the upside and we're done retracing. If we don't get those signals, let's say we do start to move back up, but we don't go above 60 on the RSI, that shows that we still have bearish momentum in charge and we could still continue to move to the downside. We've already used this area of supply, but as you saw, that supply can be used multiple times. And we barely touched it here. If we look drop, base, drop, we actually had the leg out candle go above the basing, but still working. So if we come back up to this area and we don't go above 60, expect the market to turn down from the 83.33 unless we have a smaller time frame supply zone. And we should go right through this area of demand to our next target, which would be the 76.73 or even the 76.13, which is the fib retracement inside of that demand zone on the 4-hour. Going down to a 60-minute, obviously we had a bearish trend on the 4-hour. Here on the 60-minute, we were a little more bullish on this rally. You can see we're fighting to go back down. This did pop up above 60, but starting to roll over a little bit. You almost have a little head and shoulders on the indicator, which is leading to the breakdown. So again, looking at zones, you had rally-based drop right there. Since that doesn't look like it was touched, we might have a new zone here on the 60-minute just below. 8260 to about 80, 8342. As far as movement to the downside, if we start collapsing on crude oil, I want to see where our next target might be. And it's going to be pretty close to where we had the other demand from the 4-hour right here at about 76.93, 76.18. So if you're looking for more weakness and possible continuation to the downside, you're looking at 82.60, 83.42 down to 76.93 as a possible move down if we fail to see any kind of bullish momentum. Going down to the 15-minute time frame from the hourly, we are definitely seeing weakness here as prices were trying to move up, but the momentum is heading down. I don't really see any opportunities here as far as zones other than what we saw on the 60. So I'll stick with that 60-minute time frame and look, like I said before, if we can't get above 60 on the RSI on the bigger time frames and we come up into the supply zone on the lower time frame, then there may be a good opportunity for a counter trend short, or not even counter trend. We're still bearish trend on that 4-hour and daily time frame. So I'll give you that opportunity there. Going on to Nat Gas, let's take a look at the big picture first. Go to the weekly chart. And there we go. And we're going to go ahead and make sure there's nothing on my chart. There isn't. So the weekly chart is obviously showing some troubles here. We got these big wicks and topping tails. I believe on the continuous chart, there was a weekly supply there. Let me go ahead and take a look back. Maybe I'm mistaken. Can't remember. Nope. This is all-time highs, isn't it? Oh, no, there we go. There's not all-time highs. So you can see why we're getting weakness in the weekly chart, because back here in 2014, there was the origin of some selling pressure. So it wasn't really a great supply zone, but it is pushing us down. So we'll go back to the specific contract to do our analysis again to get accurate numbers. And you can see that lots of topping tails pushing prices down right now, but we're not reversing. We're just seeing a little pullback right now. You know, if we go ahead and throw in a fib retracement to see where we might pull back to, we can go then look at the daily time frames to see, whoops, wrong button. We can go look at the daily time frames to see if that lines up with any zones. So going to the daily, we are turning southbound here from this area that we had rally base drop. So that's holding right now. And it should take us to fresh lows, because when we came in and started turning around, we never got above 60. So bearish momentum is starting to take hold here. Our next target as we move down from this daily time frame is going to be down here, where we have drop, base, and rally. So, excuse me. It also lines up with the weekly Fibonacci retracement of 61.8%. So if we're trying to look at those numbers there, I'll zoom in for you as well. You can see we're looking at 5007, right? Trading, James trading. Anyway, bad joke. Sorry, dad jokes for days. Anyway, you can see that that's where we're likely pulling back to for a little bounce at this point. If we continue through that, there's another area of demand. See, this doesn't quite cut it because we went above, but this does. We have rally, base, base, rally. So there's your next level at the next fib level, of course, as well. So as far as the trend goes, we're definitely in a bearish trend right now. On the daily, we got lower highs and lower lows. So you need to play that direction until the trend changes at those demands. On the 4-hour time frame, we are definitely seeing a bit of weakness coming in. Let's see, we just kind of kissed off of this demand area, it looks like. I'm going to get rid of the fib retracements for now because they were really only applicable on that daily for the zones. But looking for demand here, we do have the origin of our current rally up. And let's see, we do have a supply up here too, don't we? So right now we had a little bit of an impulse up on this 4-hour chart, correction back. It looks like we want to impulse back up. 60.65 to 6.206 might be a good supply zone to target for a possible short. Excuse me. To continue that downward trend. And target number 1, we've got 5049, target 2, 4.620. We go down from 4-hour to 60-minute. And the trend here, by the way, is sideways on the 4-hour. On the 60-minute, it's also a bit sideways. As you can see, we're in that kind of corrective mode that we were in. Prices are looking a little bit weak here. So if we do come back down, because you can see this, this was a drop-based drop that's already been tagged. Honestly, this is kind of a mess. I might want to stay away from it. If you're looking for that long to get back up to the 6th level, 5.548 is the possible demand here, but I'm worried about the fact that this did not go above the prior high as we left the area. So it's kind of weak momentum. If we do come back down to that demand zone, 5.548, I want to make sure the RSI is above 40. Otherwise, don't go long. You got too much bearish momentum. So that's what I've got on this smaller time frame. I don't really have the best of opportunities, honestly. We jump back up to the 4-hour. I was saying I was looking for that move back up to 6065 to go short. And if we can go long somewhere, like I said, the 5.548, that'd be great to be able to carry that all the way up to that supply. It's just not looking very strong. So moving along to gasoline, start off on the big picture here, the weekly chart. And the weekly chart is showing some weakness now. We've got divergence where prices are making new highs, but the indicator doesn't have the same kind of momentum, as you can see, from either of these highs. We just don't have the momentum needed to make those new highs. So that's suggesting we should get a pullback. And once again, I can throw in my Fibonacci retracements to get an idea of where the retracement is likely to pull back to. So let me go to my settings here and do that. Drop down to the daily chart. And what we're going to look for is that confluence where you have the Fibonacci lining up with zones, because that'll be the most obvious and best area for prices to turn. So it looks as though we do have, that's not a great zone. Oops, template. There we go. So we have rally, base, 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 but that didn't really rally very well out of there. I mean, it really became a new zone. Let's see, what's the close? 23291, high 232. Yeah, it was higher. So I guess it was kind of zone on zone. We did hit the first one. Now we're hitting the second one, but I'm not a very big fan of that. I mean, we are hitting the Fibonacci level, the same area. So we could get a bounce from here starting on Sunday evening going into Monday, but I'm not really convinced it's going to be a good opportunity. And looking back, there's another zone here at the 50% retracement that I like a little bit more. It's a little high. There it is. Rally, base, base, rally. You do have a little indecision initially, but good buying pressure coming out. And then, believe it or not, we actually have another zone that correlates down here at the 61.8. So I'm going to wait. I'm not going to get in on this one. I'm going to wait to see if we can pull back to 2.1377. We have not made a high yet that is below 60. You see these two highs are above 60, so that's still bullish momentum, suggesting this is just simply a correction right now. So going down to the 4-hour chart, there's not much of an opportunity. We already hit a zone right here and moved. So not really anything I can do on this time frame, know where I can really get in. We are seeing weakness, though. We're in a small downtrend right now, so we probably, on less time frames, you want to play the short side down to that 213.77. So let's see if we can find an entry here, maybe on the hourly chart. And there are zones, definitely zones here. So the first zone, well, you could argue this might not be fresh because there's a zone back here that was reacting to. But there's also a zone right here. Rally, base, and drop. So this may be our opportunity on the hourly chart to go short 2.3365, 2.3457 with the target 2.1377, the Fibonacci retracement. You could also maybe take some profits off here at the 2.2109. So that's what I'm seeing so far on the gasoline front. We can go over to heating oil for our last energy market. Again, start off with the big picture. Probably look. Sorry, getting cut off, so splice this together. But anyway, you see the move up, we went parabolic, which is usually going to pull back. And you can see that we don't really, we do have a little bit more momentum here. Going down to the daily time frame, looks like we got weakness coming in. We did make a peak right here. Prices tried to rally, and we couldn't get above 60. That's a bearish signal. Now, that's not a signal to tell you it's trend's reversing yet. We need some confirmation after the fact. We don't have that yet. So the confirmation would be if we do another high that doesn't get above 60, or we simply break below 40 and make lower lows. I mean, technically, we're already making lower highs and lower lows. So we're in a downtrend. We just want to see if it's going to be able to stick. And we've got a couple demand zones if we do continue to push downwards. 1 and 2 right there. So that's your targets on this move to the downside. We go into a 4-hour time frame. Now we got drop, base, drop. A little bit higher up for a possible short. I don't think we're going to get there, though. Remember, we had the higher time frame zones, I believe. So nothing else being shown here. This isn't a bearish trend, obviously. And we had a positive divergence suggesting a little bit of bullish pressure coming in, but really it's not following through yet. So if we go down to a 60-minute time frame, looks a little bit consolidation here. A little bit like it's consolidating, excuse me. Speak English today. Sorry, I got cut off again. I don't know what's going on with my recording devices here, but anyway, we're still just going sideways. I don't really have anything here, so I'm going to stick with the other markets that showed a little bit better opportunities. So that's what I got for you guys on the energy front. Until next time, trade safe, trade well, and take care, everyone.